sometimes you can generate a humongous impact, but at the same time, the investors are losing money. What are your thoughts on that? And do you see this happening in Latin America overall? Like, and your portfolio companies, how are they now in trouble? Are they in trouble because of the funding landscape has changed quite a bit in the whole world, but especially in Latin America? It's everything has basically dried up. A lot of the funds who have been investing and been very active investors in the region, they simply have no money to invest in on follow-on rounds. What are you seeing on this?
Well, Eric, you've asked a lot of questions in that one question there. So, I mean,
I know
look, I
it's
think,
like overall.
I think what's true about, venture is it's, inherently, risky industry. It's a risky investment. But so we see some, portfolio companies, some players in the region doing really, really well, and they've made a lot of money for their investors. And, obviously a lot of them are not going to do so well. So, that's kind of the nature of the
Yeah,
industry, and the power
of the
law
game.
dynamics. Uh, and what I have seen in the current environment, that funding is starting to pick up. We're seeing more and more activity. Q4 has been a lot more active than what I had expected, and a lot more active than Q3. We are seeing, our portfolio companies, the ones that have strong metrics and growth, have been able to raise capital successfully this year. And obviously, any portfolio you have uh, a mix of, excuse me, a mix of performance. And so some are not doing so well and some are doing, really well, what you could expect across any portfolio. But I don't see a doom and
Yeah.
gloom scenario. We do see, things picking up and more capital becoming available, precisely because there are great opportunities
So
out
there is
there. I
hope.
mean, yeah, and I mean,
Yeah.
we know that uh, any economy goes through cycles, and we've been going through a cycle, and what goes up has to come down at some point. And now we're seeing things, correct back to more the normality.
I think I would maybe first comment on your first reflection. I think you have to remember impact investing is investing. And the definition of impact investing is looking for a financial return and generating impact. That
Hmm.
and is key. It's not or, it's and. And so uh, impact investors follow the same logic as any other investor from that sense, and on the financial side with the additional impact criteria. And so your argument is fair, and go talk to grant funder. I mean, grant funder and philanthropy by definition is not looking for a financial return. They're looking to generate impact. And so if the narrative is kind of the narrative you laid out, there's an opportunity, that's an opportunity. If there's a company that's, you won't make money investing in it, but it's going to generate an impact, then there's a type of capital that exists for that, and that's grant funding and philanthropy. But impact investing is looking for a
Yeah.
financial return and an impact return. So I think that's how I would view that first part. On the second point, kind of what we're seeing in the environment, I think like one important distinction, we're a little bit different from other funds. We're not equity investors. We invest through revenue-based financing, which means we provide flexible, non-dilutive capital to companies where they're paying back based on a percent of revenue that allows them to scale the payments as the company scales. And so we're big believers that venture capital is a solution for a very specific type of company. And I think we saw in 2021 and beginning of 2022, a lot of companies raising VC funding that probably shouldn't have. And those are
Yeah.
a lot of the companies that are in trouble because both on the investor side and the founder side, there was a little bit lost in terms of what kind of company should be raising VC and what kind of company should be looking for other types of capital. And so we think that there needs to be a lot more options for different types of capital for startups, and then at startup, the founders ask themselves the question, what type of capital should I raising? Am I a good fit for VC? And I think that's the first step, and that can help to avoid a lot of the problems that we've seen over the past couple of years in terms of companies that probably shouldn't have raised VC funding, raising VC funding. Those are a lot of the companies that are in trouble.